Sure.
Action. Let it roll. Okay, good morning everyone, and welcome to another Regions PCCS training session brought to you live via your computer. Today's session will be on Title IV disbursements, notifications, credit balance holding, and I'm Gregory Jon from Gregory Jon Consulting. It's great to have you here today. Student eligibility. So there is no Title IV aid college degree. You don't go to school to become a Title IV expert. However, there are some things in NASFA that you can take that and some other items you can go through, but I highly recommend that you go through as much training as physically possible. It's like an athlete. You got to constantly engage your mind in order to, continue to stay updated with all the regulation changes in the last 10 plus years. It's a full-time job just staying abreast. So you want to be competent as an administrator. You need to be able to understand that financial aid is truly a lifelong commitment in Title IV. Once you're in past 3 years, you're pretty much in for an extended period of time. And your financial aid skills are beyond just processing aid. It has to do with audits and program reviews, and there are lots of those available out on the web. You can search for them to see what schools have gone through. It gives you an idea of what potentially could happen. So those are some of the outside available and free stuff that's there, is how a previous school handled the situation. Now, let's go over a few basic principles here. The Central Processing System, otherwise known as the CPS. These are the things that it goes through. The four main topics that they check is the citizenship status. They look at financial aid history. They validate the student's social security number, and they go do a data match against selective service. And if you want to know where to find that information in order for you to increase your own knowledge, you go to the FSA handbook, and each of the chapters in each of the sections here is where you'll find the material necessary to answer most of the questions that come up when someone says, what happens if my social security number doesn't match, for example, or I never registered for selective service, what steps do I need to take? Selective service on its own is a very interesting little scenario. You actually have to have the student who isn't registered contact selective service. You can do that through the computer. You can test to see if they're in the database, and if they're not, then you go through the process of making them eligible. There's a whole series of events that selective service will provide you, letters and codes that tell you whether or not you have a problem with the student. So what is the different requirements a student must meet in order to be eligible to receive Title IV federal financial aid? Well, the first one is that a student is a regular student. That means that you have accepted them for enrollment in an eligible program at an eligible institution. Now that includes branches and additional locations. So you need to make sure that all of your institution stuff is up to date, so that if you enroll a student in a branch campus or an additional location, you've met those requirements. Student is not enrolled as an elementary or a secondary school student. So you cannot be enrolled in secondary high school and receive Title IV as a student at your institution. And a student must file a statement of education purpose in accordance with the instructions of the Secretary of Ed and complete a FAFSA form. So if you look at number 2 and you say, well, that's kind of interesting. Well, you have to have a high school diploma or a GED. So if you have those, you're not going to be enrolled in elementary school or secondary education. Now here's a quick little checklist for your eligibility. The student must satisfy the citizenship or eligible non-citizenship requirements. They must have a valid social security number. Now that means if you got married and you didn't change your social security number to your married name, the department will consider that an invalid number. A student must satisfy the selective service registration requirement. So if you never registered with selective service, had a student who says, I never registered with selective service, and for a while there, we had people that said, I don't believe in war and I'm not going to register. And that's happened a bunch of times through the history. The Selective Service and the Title IV administration say, too bad, so sad. You need to complete the document. So we've had individuals who have been incarcerated just about from the time that they were an adult at 18. Nobody's really an adult at 18, but let's just say for argument's sake, someone who's an adult at 18 was incarcerated up until the age of 26, and it was impossible for them to register with Selective Service. Well, that's a very easy documentation. You just get the paperwork that shows that occurred. You send it in to Selective Service. They go back and say, yep, it's not possible for you to have been registered. Otherwise, you might have situations where a student has entered the country and they entered the country illegally and therefore didn't register, and that becomes another whole series of problems. Or they entered the country legally and they may have not completed registration. Now that occurs with some people that are very close to the maximum age, and there's usually a little bit of leniency there, but for the most part, you still have to go through the process. So you want to learn where that is. It's selectiveservice.gov on the web. Now you have a high school diploma or recognized equivalent. So let's talk about that for a second. You cannot have a completion certificate as a proof that the student has a high school diploma. You have to read the rules in every state to understand what a completion certificate is, because some of those are not GED or general equivalency diploma. And if you have a homeschool student who says they completed homeschool, there's a whole series of events with homeschool that you need to go through. So go into that chapter and look it up, and it'll tell you you have to validate that information. A student is not eligible if they were convicted of possession or sale of illegal drugs. Now, if you are a school where that situation occurs and a student is caught and is charged, they immediately become ineligible. Now that ineligibility is a very specific period of time, and there are regulations pertaining to that. So I have not, in 27 years of administering aid, had that situation come up, other than once when it first came out, where the student was picked up for selling drugs on campus. He wasn't charged, so he never lost his eligibility. Interesting little set of scenario there. A student does not have a federal student loan in default, so you can't be in default on a student loan and receive a new student loan. So if you have students who come to school and they have previous loans, it would be very important for you to pull an NSLDS, get their deferment and forbearance information up to date, get their in-school deferment up to date when they come to school there, so they don't go into default. And we talked about exceeding annual loan limits. That's one of the items where if you exceed the maximum amount of subsidized or unsubsidized or the total, because you're a lifetime student, then they could lose eligibility for aid. Now, if they owe a grant overpayment, that would be a person who you had a R2T4 completed on at some school and they received excess funds and it was from the grants program and they didn't pay it back, and that would be listed on NSLDS, and it's a very straightforward. You either pay it back or you don't get aid. Or you have a property subject to a judgment or a lien for a debt owed to the United States. Interestingly enough, in this environment, in the career-based education, I have yet to come across the student who has had that particular scenario. But in some of the more affluent four-year institutions, I've had conversations with people who had that happen when their property was seized for some reason. Imagine being in a school like Harvard or Princeton or Yale and having your parents come to find out that you are no longer eligible because property was in your name and that happened. That would be a very interesting little side event. And you didn't plead guilty or nolo contendere to a crime involving fraud in Title IV. Well, if you want to know what that is, you can go look up Howard University a couple of years ago, and they cleaned house and wiped out all the staff because they were committing fraud and stealing funds. And if a student is selected for verification, whether you do it or the department does it, and you don't complete the requirements, you are not eligible for aid. So it's very simple. If your student is selected, they have to do the following. Oh, and a side note, if a student is selected for verification and you want to do a professional judgment, you are prohibited from doing a professional judgment until you've completed the verification requirements set forth on that student's document. Continuing on, if there's any discrepancies in information. Now, this is the new caveat of conflicting information. The Department of Ed loves conflicting information. They will go in there and cite you in the program reviews. And I have, just in case it was a little fuzzy, I paused there for a second. It said my internet connection was a little unstable, so I just want to make sure I'm clear on that. But let's go. So that would give me conflicting information with my thing. Perfect timing there for our computer. I'll give you an example. A student who says they have no income and no means of supporting themselves, and they have 4 in the family, the department automatically makes that student a conflicting information. So if you have students who routinely report nothing and they have people that are dependent upon them, guarantee if they come to do a program review, you're going to be reconstructing every single one of those files and paying back a ton of money. So do yourself a favor and go review program reviews with conflicting information. You cannot have it and pay a student. If they request professional judgment, the information reviewed according to the school's policy, if warranted and updated, you need to follow your policy. You can't just make arbitrary decisions. You have to document the information on professional judgment, otherwise that is an ineligible activity. And of course, the student must maintain satisfactory academic progress. Now that's according to your published standards. So if you have NACIS and they have a SAP policy, it isn't what is required for the Department of Ed. It's most of what's required. So you need to look at your NACIS policy if you have it, lay out the Department of Ed, write your material down, verify that everybody's happy, and put it in place. Now, SAP is covered in a completely different section. It talks about grades and attendance. It talks about how you calculate it. So that is its own individual session. Now, database matches. All FAFSAs are matched against the Social Security Administration for U.S. citizenship status. Because if you don't meet the citizenship status requirements, you're not going to receive financial aid. And FAFSAs that have an alien registration number are matched against Homeland Security. If DHS fails to match the primary and secondary verification, the school must conduct the 3rd step verification through the systematic alien verification for entitlements. Another acronym for you called the SAVES system. There's a couple of things you need to know about that if you're dealing with students who do not have alien registration numbers and are not citizens. Of course, the central processing, the CPS, matches against NSLDS. We talk about NSLDS in a separate section, but essentially they're looking to see that you don't have any of the following there: loans in default, unresolved overpayments, and so forth. NSLDS history, total and permanent disability. Now this has popped up a lot this year, and most of it is to do with military issues. We talk about this in the NSLDS section, but we'll touch on it here a little bit. If an individual whose prior loan or teach grant obligation was discharged due to a temporary or permanent disability and wishes to receive a new direct loan or grant, they must go through the following steps. They must provide the school with a physician certification that he or she can engage in substantially gainful activity. Essentially what the documentation you're required to say is, well, I really wasn't permanently disabled when I applied because I can actually go to work. And they have to sign a new statement acknowledging that any new teach grant cannot be discharged on any present impairment unless it deteriorates so the individual is once again temporarily or permanently disabled. I suggest you learn about that scenario because students will try to juice the system. We've had it come up. We've had services contact us at previous locations. I've had the department come in and say that the student falsified. They went after the doctor's office and said that they had granted them a disability to discharge the loans, which wasn't true. So I suggest that if you're going to have a student who brings a temporary and permanent disability, that you do your homework and understand the process and the requirements before you meet with them. Because if you have the student become no longer total and permanent disability situation, you will have a circumstance where that student might get investigated. Social Security numbers, of course, they look for Social Security numbers. The central processing system cannot validate and give you an ISAR that you can pay without the Social Security number matching. They verify the name and birth date associated with the Social Security number. So if you have 7 names on your Social Security card, you better be sure that you put the information on your FAFSA that starts with your first and your middle initial and your last name starting with the first of your last names and listed out across the line. Social Security and CPS will stop validating after a certain number of characters, but it's not the same for every student. So if you're Fernandez, Is your last name? Make sure you list it in there. If there's no hyphen, please don't put a hyphen in. If there is a hyphen, make sure the hyphen is in there. CPS won't process without a social security number. If the student's parents don't have a social security number, the parents must enter 000s. Now that means that they had entered the country illegally, don't have a social security number, and that student may have a social security number because they were born in the country, and that affects how they process aid for the parents. Now that's a whole set of rules on that. So you want to go ahead and look into the handbook, look into FAFSA. If you pull the information up, it tells you, quite honestly, that they have to report the information to the best of their ability for the income that they made. Now, some individuals who don't have social security numbers have tax identification numbers. That's fantastic. That means you're going to have tax forms. Does it mean you can have the DRT, the data retrieval tool used? Absolutely not, because the DRT won't match without a social security number. Now, I work currently in the state of Hawaii, and I have persons from the Republic of the Marshall Islands and the federal states of Micronesia and the Republic of Palau, and I see them, and they do not have social security numbers, and there's a whole separate set of rules on that. So if you are in an area where that comes into play, I suggest you read the rules on that because it's very specific, and it tells you what a student can and cannot qualify for based upon their status. Now, first-time filers who indicate on the FAFSA that their state of legal residence is one of the above those islands enter a 666 digit in the first 3 digits of the social security number. That way, the department will assign that student a number. See, it's a little more complicated than just answering questions when you have certain scenarios, and that's one of those certain scenarios. Now, if the successful match happens, the student is eligible for Title IV aid. Yay, they can get financial aid. If there's no match on the social security number and you got fat finger Freddies like I do, and you hit the number in, now if you're entering the data into this FAFSA for the student, I highly recommend you stop doing that. But if the student makes a mistake on their social security number, you're no longer able to just process that ISAR and update the social. You have to go back and start all over again with them. Now, you may have had a data error entry. You may have had a social security database. You may not have the name match. You may have spelled the name wrong. They may have had married, or they may have information that's missing, or lo and behold, they may have reported that social security number to a dead person and that was assigned and it hasn't cleaned up yet. Now, if you have an unsuccessful match, the student must register or provide evidence that he is registered with Selective Service. Okay? The CPS can forward the student's registration. Okay? But it won't forward that if any of the above information is missing. Conflicting information. This is the key element that will get you in trouble with the Department of Ed. If you are a financial aid officer or administrator at your school and you identify conflicting information for a student, or you have reason to believe his or her application is incorrect, okay, reasonable doubt is what the department looks at. So if you have information that doesn't look right, you must resolve the discrepancy. So I suggest that you recognize that if someone places 9 people in their household on $12,300 of income, and 6 of those people don't have the last name, are not related to the people, you probably are going to have conflicting information. And if you discover discrepancies after dispersing FSA funds, you must reconcile the conflicting information, and it may require the students to repay aid which they weren't entitled to. And if you go to the verification guide in volume 2, chapter 3, you will find the basis for how to solve conflicting information. Now, need analysis and packaging. This is the operational basics of Title IV, okay? Third-party services do a lot of this with you, but you still have to know it. What happens when you process the FAFSA is it calculates the EFC. Something as simple as a zip code can change the eligibility on 2 different students with the exact or nearly exact information. So let's say we're married and 3 kids and $35,000, and we file taxes and everything's the same. One lives at one zip code and one lives at a different zip code. I'll use the example of Northern Virginia and Baltimore City. Northern Virginia has state tax only. Baltimore City has state, county, and city tax. So therefore, the income is different for the student who lives in Baltimore, and they will get more aid than the student that lives in Virginia. That is just one of those little things. on how they determine what is available as the expected family contribution. You must develop a cost of attendance model. It is not okay just to go and arbitrarily add information, have your servicer do, yay, this is your new cost of attendance. You are required to develop a process. What I would recommend is you do a survey. If you have 500 students and 210 send it back, then your survey is based on 210. So you have to report that we attempted a 500 student survey. There were 210 respondents, and the average for the cost of attendance for students who live at home, independent, dependent, all the scenarios, this is what your cost of attendance looks like. You have to have a method for awarding aid, how you process and handle Pell grants. You need to have policies and procedures for your direct loan handling, how you notify a student applicant who completes a FAFSA, what are the proper requirements for you in consumer information. You need to explain to the student the difference between cost of attendance and expected family contribution, because that is what you base your subsidized loan on, okay? And your expected financial aid, that's the total difference, is what you're unsubsidized, because you can borrow an unsubsidized even if the student's EFC is $10,000 and your cost of attendance is $5,000. Unsubsidized does not care what it costs and how much the student is supposed to pay. You can borrow the whole amount. So if you do not understand that, I suggest you go to the direct loan section of the FSA handbook and read about unsubsidized loans that can be used to replace EFC. A student's EFC is the same at any school. So when you get an ISAR and it's printed and you're the 04 ISAR and the student tried to go to a different school, the EFC on the 04 here is the same as the 04, the same printing would have occurred on the other school. If there were no changes and you had an 04 updated ISAR that came to you because they changed your school code, then the information that was on the 03 ISAR is going to be exactly the same as the 04. Any changes that are made will affect the student's identified number, that ISAR last two digits. However, changes to EFC don't always occur. So the EFC could change during the year as a result of verification or corrections that you do or that you have the student do. It could change year to year because of the changes in the tables and the family data. So if somebody earns the same amount of money for the last 3 years, it is possible that their EFC will not be exactly the same. 0 one year is not always 0 the next year. An official EFC is one that's calculated by the CPS and found on the information, the individual student information report, the ISAR, or the student aid report that they get. Always use the primary EFC for federal student aid programs. Pell Grant always uses the 9-month EFC, and for all other aid, you have to actually look at the actual period of enrollment, which is why sometimes your EFC for programs that are 6 months long look different than what the ISAR number is. That is truly because a 6-month program can only use a 6-month EFC. Mind you, if your program is 6 months and 11 days, it's going to look at the 7-month EFC because the student, after they complete the 6 months, has 11 days of the 7th month that they're using. Therefore, you would use the 7-month EFC. Cost of attendance. Well, there's a very specific piece of that in the Higher Education Act. It's only expense items specified in the Higher Ed Act can be included. You can't just arbitrarily add stuff. Okay, you can. It is more than just direct cost, by the way. So if you are an online school, believe it or not, there's a cost of attendance you have to address in a student who attends only online that has an expense related to being a student. It's just like a student who commutes 27 miles one way has a different or can have a different cost of attendance than a student who rides the bus or a student who lives near your school. Now, you normally address that when you do an average cost of attendance, but if somebody has an exorbitant amount of expense when they're traveling to and from your location, you can do that under professional judgment and increase the cost of attendance. Typically, that only would change subsidized and unsubsidized eligibility. So it's a big amount of work for a little amount of gain. The Pell cost of attendance is the cost of a full-time student for the full academic year, and you always use the full-time award year for calculating Pell grants. Cost of attendance for other programs is associated with that period. So if you have a 6-month program, the COA for your students for loans is a 6-month cost of attendance. Here are some of the key concepts and definitions that you want to be aware of and where to find them. The academic year is identified in 668.3 of the rules, and there's semester, trimester, quarter, and clock hour definition. So if you're either one of those schools, there's a definition for you. Weeks of instructional time is subpart B of that same section. Program lengths are in 668.8. Award year is located in the 600 section of the rules in .2, and payment periods are also in 668.4. Standard term, non-standard term, non-term credit hour, and clock hours are all covered in the student handbook in volume 3. Rules for each of those are different. If you are a clock hour program and you are approved as a clock hour program, that is how you are functioning. You will follow the rules of a clock hour program. Pell Grant formulas, there's 1, 2, and 3 for credit hour programs, and all clock hour and non-term follow Pell Formula 4. There is a complete step-by-step instructions in the FSA handbook for each of those. If you have a third-party servicer and they tell you you are Pell Formula 3 because your credit hour and you are listed as a Pell 3, make sure you understand those rules. No, we will give you a quick down and dirty calculation of Formula 4. Formula 4 says for clock hour students, whoops, let's go back to that. Hang on a second, let's go back. This is right from the handbook. So Formula 4 says clock hour programs and credit hour programs without terms. It's determining your enrollment status of at least half-time. Okay, first that you have to determine it, then you calculate your Pell hours in the program over for the academic year over the hours which the cost applies. So if you want to know what your third-party servicer does when they set up your formula, this is the process they go through. There are 5 steps for determining your use of Pell Formula 4. And there they are. Determine the payment per payment period. So if you have a 750 clock hour program, your payment period is at 375 hours. Crossover payment periods for clock hour and non-term. Now, we all know that a payment period that includes the June 30 and July 1 dates cross over the threshold of the July 1 of the year. Aid can be paid from either award year. Payment period must be assigned to and paid from one award year. Students have a valid ISAR assigned for the year and have any remaining eligibility, you can use it in crossover. Any drawdown from crossover periods may pay all costs associated, even if paying for the next award year. You may use a different award for Pell than for other Title IV aid in the crossover. Institution has the flexibility in how crossover gets assigned. Okay, so some schools have what they call a header or a trailer, or they assign a crossover on a payment period basis, typically in a clock hour environment. So you start in May, the student's payment period ends July 17th. The first payment period would start normally with the trailing year. So in this situation, the trailing year is 1920. Okay. Now, if the student doesn't qualify for any Pell out of that, but they qualify for loans, you run all the loans out of 1920, and lo and behold, 2021, that student is Pell eligible. Well, that student crossed over and could have Pell paid all the way back to May from 2021. Please make sure you understand the rules on how to use your FAFSA year to your advantage. The students cannot receive Pell for both award years in the same payment period. Pell is going to be chosen for one or the other. There are 3 required elements when you book a loan. Okay, you have a direct loan origination record, a master promissory note, and a disbursement record. Now, originating a loan occurs when you complete the process to originate the loan in your system. So if your third-party servicer says, well, we do not originate any of the loans until we send them in, which means that you have to prove that that loan was eligible and the calculation was done in your system for that loan to be originated and dispersed should the student have not maintained attendance up until the last day that the first disbursement occurs after the last date of attendance. So that would change how you would use those loan funds. So I would always ask them very simply, what do they consider origination and how is it recorded so you can prove the origination date occurs. Typically, if you're doing it by yourself, you want to originate the loans at or before the student's period of attendance starts. So if you have an orientation on a Friday and 29 students show up, and those 29 students have financial aid in process, originate all 29 loans on Friday, and then go through the process of making them eligible based upon if they previously borrowed or need a 30-day delay. The EFC and cost of attendance must be reflected for the entire loan period. Loan amounts for periods that are not equal to one academic year must be prorated. EFCs that most reasonably correspond with the number of months must be used. That's why I said if your program is 6 months and 11 days, it's actually 7-month EFC you would use in that case. And the COA reflects the costs that are incurred during the loan period must be used. 150% direct subsidized loan limits. Now, the law limits are subsidized only, meaning that if a student exceeds 150%, that's based on your educational program length, and that's covered in detail in another section, the student could receive unsubsidized loans but not subsidized. So the law includes a potential loss of subsidy for each borrower after the 150% point is reached. Now, you may have a standard academic year, an SAY, or a BVAY. This is credit hour programs typically use a schedule or standardized award year, academic year, sorry. Clock hours always use a borrower-based. So if you're unsure how you do it and you have a third-party servicer, go over the rules with them. But our borrower-based academic year is the financial aid model that allows financial aid to be used in a non-term structure. That would mean that programs, credit hour non-term, where you have to earn all of the credits before the next payment period starts, follow the same rules as clock hour. The start date of the financial aid year begins upon enrollment into a program. It ends 48 weeks later. The year is then made of 2 24-week payment periods or 4 12-week billing sessions. Okay, so it's possible to have all those structures in a 48-week borrower-based academic year. Eligibility for direct loans. A school must determine if the student is eligible for a grant before awarding loans and the student is eligible for subsidized before awarding unsubsidized. If you fail to award the correct amount of subsidized loans and award the student additional unsub and they had subsidized eligibility, that is a program review finding, and you will be required to revisit your accounts and prove to the department that you know how to use subsidized limits first. A student must meet the general eligibility requirements and be enrolled at least half-time. If for your requirements, you are required to notify the applicant of the financial aid offer. Now, there's a lot of language going on about this right now. When you produce a financial aid award, you're actually providing the information to the student, and you might want to call it an award letter, but it's actually an award offer, okay? If you call it an award letter, it is an offer of eligible aid that the student could receive at your school should they choose to accept it and enroll. You want to avoid issuing financial aid that does not, a financial aid offer that doesn't include the cost of attendance. That's part of the consumer information. I will tell you, if you are found to not include the cost of attendance, the department will have a connection. Avoid listing the cost of attendance without breaking down into its clear components that the student understands what's going on. There are direct costs associated with the enrollment agreement, and there are indirect costs associated with them surviving while they're in school, eating and living and transportation. Avoid listing grants and scholarship aid, loans, and work study together because those have 3 separate requirements. Grant or a scholarship is something that is issued to the student. Now, mind you, if you're doing a tuition credit or tuition waiver, that is not a scholarship. Scholarship is actual money that you're using. You can read the definition on that. A Pell grant is separate from a loan because you don't pay the Pell grants back. The loan has specific requirements. And if you have work study, the student has to meet the requirements to be a work study student. That's why they want you to list them in 3 separate sections. Usually list grants and scholarships on the top, loans in the middle, and work study down at the bottom. Avoid listing student loans without clarifying the source of where the loans are coming from. Avoid listing plus loans without student loans. So if a student loan is available, specifically as subsidized, and the parents are going to borrow a plus loan, and you should separate them so they see that there's different requirements. Avoid issuing an offer letter without the critical next steps that you're required to explain to the student, and avoid issuing one without the net cost calculated. You know, that's that whole scenario. It's a whole separate section all by itself. Now, the college financing plan, which is formerly known as the shopping sheet, there was an electronic announcement in 2019 that updated. July of 2012, they decided that they were changing from the shopping sheet to the plan. This rule is not new. It's been in effect for a long period of time. The department releases both a traditional template and a responsive preview, which feature the improvements. And working with the NASFA group, the department has received input from financial aid administrators, and they are trying to put a single template together. And of course, COVID-19 has prevented that from happening. A disbursement overview. Okay, so this defines the date the school credits the account and the school pays a student or parent directly. Now, typically in your scenario, it's when you post it to the ledger. If you are using a third-party servicer, the date they provide you is the date you must use. The funds are going to be received from the department on that date, so effective that date. Now, if you have to deal with things like heightened cash monitoring 1, you have to post the date first and then ask for the funds. That would be considered dispersed prior to receiving it. Okay, school funds used in advance of receiving funds from the department is where that comes into play. So you can typically, you know, it is possible, okay, it is truly possible for you to put down on Monday that you're going to disperse the funds. And then you receive notice that those funds were dispersed on Wednesday, but you gave the student credit for the funds on Monday. What that does is shorten your 14-day schedule. So the disbursement rules and requirements of what dates you use, if you're using a third-party servicer, they help you with that. If not, please understand that you have to use the actual date or a date in advance of that from the department. The disbursement date reported to COD must be the actual date of disbursement to the student's account. That's why I said if you use an advance date, it still must be reported to COD as that advance date. Schools must notify the student of the amount of funds expected to receive from each of the programs. You are required to provide, prior to disbursement, a notice that tells the student how and when the disbursements will occur, what the anticipated date, and the amount of the disbursement. The student and parents' right to cancel all of their loan and the procedures. If you don't have that, the department comes to visit you, you're going to have an issue where you have to explain why you failed to provide the student the basic disclosure requirements for their disbursements. A school must obtain authorization from the student before performing any of these activities. They must obtain authorization for FSA funds to pay allowable education-related charges other than tuition, okay? So if you have books and so forth, there's an opt-in, opt-out process that you need to review. I suggest you do that. Before you disperse work-study wages by an EFT to a bank account designated, you have to have authorization. If you credit work-study wages to a student's account to pay charges, you have to have an authorization. And you have to have an authorization to hold a credit balance. Oh, and by the way, you are not permitted to hold a credit balance for any reason. At the end of the loan period, you must return all of the credit balance from that loan period to the student. Don't assume that you can just automatically hold it forever and ever. So if you have a program that's 1 year plus an additional 5 months, that loan period for 1 year has a credit balance from Title IV of $2,140, and you don't give it to the student, the department's going to make you reconstruct all of your records and tell them how much money you didn't pay and then charge you a penalty on every dollar you failed to pay. You must have an authorization before dispersing FSA funds before dispersing, you must determine and document that the student remains eligible. Okay, so secondary disbursements, what do you need? Third disbursements, SAP, right? Okay, you all know that you take care of the first two, the ISAR and eligibility at the beginning. However, a continuous SAP is part of the disbursement process. Okay, it's not okay to do satisfactory progress every month and then call it satisfactory progress for disbursements. Okay, SAP is very specific. There's a whole section assigned to it. So if you are unclear about your monthly evaluation versus SAP, I suggest you visit that section. Both you and your third-party servicer must have a process in place to make these determinations, and you must be able to prove to the department that they are doing it. Funding basics. The school reports disbursement amounts for each Title IV program to COD, on which dates and the amount. Amounts disbursed in COD increase the authorization to drawdown. So let's look at this for a second. When you go and originate loans and you tell the department, hey, yo, save me some of this money from all the money that's going to be given to students because I have students who are going to need loans. And then you go and pay that down, and the department keeps track of how much you pay down. So every time you increase the total amount of funds that you disperse annually, the department increases your initial authorization based on that so that they can anticipate how much money they need for you next year. Institutions request drawdowns through the G5 system for each Title IV program. The school reports the anticipated disbursement date to COD. The school drawdowns the fund from G5 when they're instructed to, and disperses Title IV within 3 days and pays credit balances to students within 14 days unless you have a written agreement. Disbursements that are made in modules. A student who is enrolled in a module within a payment period is enrolled for the entire payment period. So if you have 3 modules, 4 modules, 5 modules, you pay them once based upon the total enrollment for the period. The cost of attendance excludes periods of non-attendance in modules. So if a student skips a module, you're supposed to remove that from the cost of attendance and determine if the student is still eligible. Disbursements cannot be scheduled for periods of non-attendance. So if a student attends module 1 and 2 and skips 3, they better have completed modules 1 and 2 so they earn the credit to be eligible for the disbursement if they're not going to be there. It's like being on an LOA. You can't disperse a loan when they're on an LOA. A school can make a single disbursement based on the enrollment status for the entire term. That's why I said if you have modules, you base your number of credits in a modular scenario. Clock hours are not module. Okay, this is a credit hour basis. So if a student is attempting 12 credits in a modular system, you pay them based on 12. If they fail to attempt the credits, you have to recalculate the eligibility. If it drops below half time, the student would still be eligible. So let's use this example. If I have 4 modules and I've got 3, 6, 9, 12, take 1 class every 5 weeks, 20 weeks is my payment period. The student starts the payment period. He was scheduled for all 12. He receives a loan. He keeps the loan. Now, if the student goes for payment period, module 1, module 2, module 3, and then he stops, he only went 3/4 time, the student's Pell would be recalculated, but the loans would stay at full time. Title IV credit balances. I'm not sure why this is such a hard thing for people to understand, but I continually find over all the years of auditing records and being involved in program reviews, preparing for court cases, that the schools just don't understand what a credit balance is. An institution may credit a student's ledger with Title IV funds to pay for allowable charges during the payment period. Allowable charges are tuition fees and institutionally provided room and board. So if you don't provide that, you have no room and board as part of your direct costs. Books, supplies, and other educationally related goods and services provided by the institution, for which the institution obtained authorization from the student. So just because you hand out books and supplies doesn't mean that student is allowed to have it charged to their account. You have to go through the process of recognizing whether books are part of your tuition or books are an outside cost. And if they're an outside cost, you have to go through the opt-in, opt-out process. You may pay back prior year charges of no greater than $200, okay? And a Title IV credit balance occurs whenever the amount of Title IV funds credited to account for the payment period exceeds the amount that you charge or assess them for that period. So if you have $3,000 of institutional charges and you credited them with the following, and you have a Title IV credit balance of $2,172, if you have it on a payment period basis, okay, you don't have to do credit balances to a student who gives authorization to you to hold it until the end of the loan period. If you don't have an authorization and you receive those funds, you have 14 days to give the student $2,172. You are also required to track how much your credit balances you have on your account. Make sure you have the amount of funds set aside. That is in the rules that you can pay the amount that you have in outstanding credit balances. It's also a good idea for your business office to track the loan periods to know exactly how much each month is going to be due back to students when the loan period expires. If you have no authorization, you must pay the student no later than 14 calendar days after the imbalance occurs, period. No discussion. 14 calendar days after the first class or on or before the first day of class, if you pay them early. Schools are not required to pay credit balances below $1, okay? Students and parents may voluntarily authorize. If you have a procedure that says all students must sign this form for credit balances, that's not voluntary. The form also has to explain to the students how they can opt out. You must also identify each of those funds on a subsidy ledger that shows you have the money in hand to pay those credit balances. If not, you're not financially responsible and the department will fine you and potentially pull your authorization. The school may retain any interest you hold on credit balances. Paying a credit balance occurs if you pay a check. The school mails the check or initiates an EFT and notifies the student within 14 days that the funds are available. And you can hold it up for 21 days from the date of notification. Okay, it's not a good idea to hold checks. Okay, the department looks at the process date, they look at the transaction date, they look at the clearance date. If they feel that you are artificially delaying the receipt or pickup or disbursement of funds for a longer period of time, they will cite you for failure to handle Title IV funds correctly. You must release any remaining Title IV balance, okay? The words are Title IV balances, okay, by the end of the loan period. It's very important that you understand that you must track your funds because other FSA funds by the end of the period and the award year, okay, all of that's included. So if you have extra Pell, SCOG, and any of those things, and the student has a credit balance of $6,114 at the end of the loan period, too bad, you need to give them the $6,000. You may not go beyond these deadlines, even with student or parent authorization. The rules are very specific. At the end of the loan period, that entire award for that student exceeds the cost for that period, you must give them the funds. Thank you all. Hope you had a wonderful time, and we'll see you again soon. I'm Gregory Plourde from Gregory Jon Consulting.